If you've ever thought, I don't have 20% down, so home ownership probably isn't for me, today's episode might actually change everything. We're talking FHA loans, what they are, who they're for, and what people get wrong about them. Welcome to Beyond the Rate, the show where we make mortgages feel a lot less terrifying. I'm Carrie Worth from Charter West Mortgage Center, and I am learning right alongside you. Today, you'll leave knowing what FHA financing is, how it works, and whether it could be a smart path to home ownership. Let's meet our guides for today. I'm joined by the ever hilarious Des Moines team. I'm going to let them all introduce themselves and we'll let the hilarity in soon. So, Dom, why don't we start with you if you want to kick us off?
Oh boy, we'll get it started. Dominic Black, and I'm the sales manager for this West Des Moines group. I have been in mortgage lending for almost 30 years now. So plenty of experience on the FHA side. And speaking of FHA, one of the top misconceptions I hear most about FHA is, you know, it has to be for bad credit, and that's not the case.
Okay. That's good for our listeners to understand today. And we're going to get into that a little bit more. Bobby, do you want to introduce yourself?
Yes, absolutely. Bobby Burgett. I've been in the mortgage lending world for about 20 years now. So I have plenty of FHA experience as well. Common misconception for FHA is that they only work with borrowers who don't qualify for conventional. But yeah, it could be a lot better fit for the borrower.
Hmm. Okay. All right. Zach, you want to head us up next?
Yeah, I'm Zack Klatt. I've been in mortgages since 2007. And I'd say the most common misconception with FHA loans is that you have to be a first time home buyer.
Hmm. That's a good one. All right. Sam, how about you?
Sam Leahy, been doing financing for 14 years now. I'm going to echo exactly what Zach said that, you know, the misconception is that an FHA loan is just for a first time home buyer, that there are other options in regards to credit that we could pursue. It could be the best possible fit. The other misconception is that you know, it's a bad loan, that it's a loan that, we have to stick you in this loan because there's no other option. That's just simply not the case.
Hmm. So that's good for anybody listening today who is just a little nervous about whether or not they can actually get into purchasing a home. So we're going to dig into all of these misconceptions. We're going to talk about all of the details from the very ground up, just starting with what an FHA loan actually is. So we're going to kick it off with Dom. In plain English, Dom, what is an FHA loan?
Well, let's just start with what FHA stands for. It's Federal Housing Administration. It is an agency within the Department of Housing and Urban Development. FHA was created to improve housing standards, stimulate home the housing market, and to support construction. And they did that by encouraging home financing by reducing lenders' risk.
Mm, okay. And what does the government actually do here? What is the government's involvement with FHA?
Well, FHA doesn't actually lend money. It actually insures the loans that are made by FHA approved lenders. So insuring the loan protects lenders against losses due to a borrower's default.
Okay. All right. And we're going to get into some mortgage insurance here a little bit later, too.
Yeah, we'll definitely dig in a little more.
Yeah, that's an important piece. So, what kind of buyer is FHA designed to help? Zach and Sam kind of mentioned, some people think it's only for first time home buyers, but that's just not the case, right?
That's not the case. No, and we're going to dig into that as we go through this a little bit more. Yeah, it originally it was again, implemented to help more home buyers, but it was geared towards first-time home buyers and buyers with lower credit scores, but that's just not the case, and obviously, we're gonna dig into that a little bit.
Yeah. Yeah. Okay. And you kind of hit on this a little bit, but I think repetition is important for anybody that's listening. Why do FHA loans exist in the first place?
Uh, it was actually to improve, or to actually stimulate the market in the home buying market. That was
Mhm.
mainly one of the big reasons, encourage homeownership.
Okay. All right, so there are some benefits to an FHA loan. There's benefits to all types of loans, and really it comes down to talking to a trusted loan advisor to help you figure out, which fits you. But in terms of FHA in particular, what are the main advantages of FHA financing?
I'll go ahead and take that one. The big benefits of FHA financing is, again, you don't need 20% down. That's a big common misconception. You can work with as low as 3.5% down as the minimum up above that. Also, we do go off of findings for credit. There's really no minimum credit score per se. As long as we get a approved eligible funding and we meet all the guidelines, then we can go to as low as some lenders can go to as low as 580 on the credit score, assuming we meet all the other guidelines. So a lot of benefits there, and it's good product for people because there's with the credit where it's at, there's no adjusters, so they're getting a very competitive interest rate, low PMI like we've talked about. So it's really good product for not just first time home buyers, but repeat buyers to put themselves in a better financial position.
Okay.
So a lot of benefits there.
Okay, you mentioned PMI, and just for anybody that doesn't know what that is, that's private mortgage insurance. Is that correct?
Correct.
Yeah. Okay.
Yep.
All right. Anything else you can kind of just share real quickly on PMI? Just what it is.
In fact, it's for sharing the loan. So it's insuring lenders in case of default by a borrower. So they're just recouping their funds.
Okay. Okay. Good to know. Sometimes our listeners don't know those abbreviations. So I want to make sure that everybody's getting included today. All right. So what is the minimum down payment for FHA and what actually determines that number? Bobby, you want to take that one?
Yeah, sure. So the minimum down payment is 3.5% down. So that's the minimum. And that will get you the basics as far as again, not having 20% down, 3.5% down. You can put as much as you want down above that. But that's a nice benefit of the program is because 3.5% down can be affordable to a lot of people versus the 20% or more that people think they need to get into a house.
Yeah, absolutely. That's a huge difference in terms of that 20%. And so we're really looking at an opportunity for people to get into a loan when they just don't think that they can. Um, you said 3.5%?
3.5% down is the minimum FHA requirement
Okay.
for a down payment.
Okay. And does that fluctuate based on, say, other stipulations? So if I have a lower credit score, do I need to put more than 3.5% down?
That's a great question. The minimum for anybody who qualifies for FHA is 3.5% down. So anybody who has a 600 credit score is the same down payment requirement as somebody who has a 780 credit score.
Oh,
So that's a huge benefit. And there's no adjusters per se in there, so everybody's getting a very good interest rate, and the same structure to make housing affordable.
okay.
And I think there's one caveat on that there too, Carrie. Sorry to interrupt, but and I think Zach will touch on this. But once you drop below that 580, FHA will lend below 580. However, it's 10% down minimum.
It is. Okay. All right. So again, you kind of mentioned this, and if we just want to skip over this question, let me know. But how forgiving is FHA on credit compared to conventional?
Um, yeah, that's a great question. So, timing guidelines are a lot more flexible as far as if there was a past bankruptcy or foreclosure, short sale, something along those lines that you've had trouble with in the past. They are a little more forgivable in the timing for eligibility of that product. So it does help that home buyer get into a home quicker than a conventional financing if they're in one of those situations that impacted them in the past. So as far as that goes, they are a lot more flexible on the credit, especially when it comes to any credit, public credit, things like that that hurt you in the past.
Okay. All right. That's really good to know. Is there a situation where FHA is just clearly the best move?
Yeah, and in a lot of cases, you know, a lot of people shoot for conventional, but the person who may qualify for a conventional loan at 620 or 640 credit score may have a higher payment than that same situation with an FHA loan. because of the loan level pricing adjusters that come in play. And so with FHA, it could be cheaper monthly, which then is more affordable, which is a lot of people's main goal is to make housing affordable. And so a lot of times you'll see FHA payments are a lot more affordable, side by side to conventional, depending on certain situations.
Okay. All right. Thank you for that. So we're going to talk a little bit about the part that people don't understand. We talked about, and I asked what is mortgage insurance, right? So, um, can someone kind of answer why again? Why does this exist? Why is this important for lenders?
Yep. I'll take over. So mortgage insurance is basically there to back if the loan ever becomes default. So if someone was ever to default on a payment, that basically their skin in the game that the lender has gotten, that if they stop making payments, that they're not completely out.
Okay. All right. And there's a difference between upfront mortgage insurance and monthly mortgage insurance, right?
Mhm.
Can you explain that?
So FHA does charge what's called an upfront mortgage insurance, which is 1.75% of the loan amount. The good thing, the way that they structure this is that it can be built into the mortgage. So you're not actually going to pay that fund at closing.
Okay.
And then you're going to be paying a set amount every single month for the duration of the loan as well. But it's built into that monthly mortgage payment. So as long as you make that mortgage payment, out of sight, out of mind. Like it's the same thing when people escrow taxes and insurance that
Right.
you make your monthly payment, you see that set amount that you need to make, you're good.
Yeah, you're good. It's all built in, so you don't have to worry about extra payments or bringing extra money down, or when it comes to closing time, that kind of thing.
Yeah.
Okay. How long do you pay FHA mortgage insurance? Is it the life of the loan?
So there's two scenarios. So if you do minimum down, you will have that for the duration of the time you have that loan or until we can refinance you into a different product.
Okay.
Other option, you put 10% down and then it falls off after 10 years.
Okay.
So doesn't matter if you come to the table with an FHA loan and you put 20% down, you're still going to be paying mortgage insurance for 10 years.
Mhm.
So that's the big misconception with an FHA loan too, is that some people are like, well, I can do an FHA loan and put 20% down. Well, you're still going to be paying that mortgage insurance for 10 years or until you refinance out of that product.
Okay. So in that case, you probably wouldn't want to put 20% down, right? Because you'd kind of want to keep that cash in your pocket.
Right. Well, it's twofold. I mean, the end of the day, like we all talk, the biggest thing is payment. So if the payment makes sense, and the product works, put you in that, and then, you know, we can revisit that down the road.
Mm-hmm. Okay. All right. What does cash to close include for FHA buyers?
Um, it's going to be unique because obviously there's, FHA programs do have down payment assistance, which is a whole entire topic that I'm sure that you're going to cover at some point. Um, but normally, you have 3.5%, and then you have your closing costs, which would include, your origination fees, which would be, basically keeping the lights on to pay underwriters, processing, operations staff. You got your appraisal, flood certifications, title fees in Nebraska, attorney fees in Iowa, and then obviously you have your escrows as well. So,
Okay.
which would be collection for taxes and insurance to make sure that, that fund there's enough funds in that account to pay taxes and insurance when those come due.
Okay. And any other surprise costs that people should plan for? You kind of touched on all the things that could possibly come up, but I think it's just important to point out that it's not just your mortgage payment. There can be or there is, other additional payments that go along with that, right?
Correct. Yeah.
Yeah.
I mean, it's not just 3.5% that, you will have those additional fees. Um, and that's something that, from a realtor standpoint that we talk to those realtors and, it's something that can be negotiated as well, that the seller might be able to, negotiate to pay some of those fees as well.
Oh, nice. Okay. So, yeah, just very important. We're not trying to deter anybody from getting an FHA loan or to getting a loan at all, but I think it's just important to be smart about what the entire payment is made up of, um, because it's not just that loan payment. It's everything that Sam mentioned. And the lenders here at Charter West, we want to get you into the appropriate payment so that you can stay in your home, right? We don't want to get you into a situation where it's just going to be above your head and you're drowning essentially. All right. So we're going to get into some myth busting and I'm going to give Zach a hard time with this one cuz he's our myth busting expert. So Zach, I'm going to list off a few myths here and you can tell me yes or no. You can tell me if it's a truth or of falsity. So, first myth, FHA loans are only for people with bad credit.
False. Anybody can. I mean, good credit, bad credit, whatever. Anybody can qualify for a FHA loan.
Okay. FHA loans take way longer to close.
False. We still have to get title, appraisal, underwriting done. It's the same as conventional.
Okay. And how long should I expect for that to take typically?
Depends on what they put on the purchase agreement. But
Okay.
I mean, we could get it done 2-3 weeks if we had to.
Right. Okay. Good. Good to know. Sellers hate FHA offers.
No, unless there's something wrong with the house that they don't want to fix. But if they do take away, that they're taking away a huge pool of buyers if they don't want to fix the things that need to be done to the house.
Right. Sellers just want an offer, right? A solid
Yeah.
offer.
Sure do.
Okay. You can't buy a nice home with FHA.
Not true. The maximum loan amount on it is $41,287. So you can afford a nice house with that loan amount.
Okay. You said 541.
It's 287.
287. Okay, good number to know. FHA is always cheaper than conventional.
Not if you have higher scores, because the mortgage insurance could be lower on a conventional loan than it would be on an FHA loan if your credit scores are higher. And then you'd also have that 1.75% upfront mortgage insurance premium that you're financing into the loan.
Okay, so it can be a little bit more costly in some cases.
Yep.
Yeah, okay. And I think we hit on this already, but is FHA only for first-time home buyers?
No, it could be your first time, your second time, your sixth, seventh time, or you're buying a house. You can use FHA.
I threw that in there. He was saving it for later. Nice job. I like how you weave that in there. All right. Well, thank you for that, Zach. We're going to talk about the house itself because FHA does actually have some rules and some appraisal requirements. So, Dom, I think you're going to tackle this topic. First question is
Correct.
what kinds of homes can you buy with FHA?
All kinds of homes, obviously, single family, condos, where there's some caveats. A condo has to be approved FHA or to purchase a condo. Townhomes, manufactured homes. There's obviously some caveats to that also because manufactured homes have to be on fixed foundations. Axles have to be removed. There's all kinds of stuff in regards to manufactured homes. And then you can buy up to a 4-unit property as long as you're living in one of the units.
Okay. All right. So you can buy duplex, triplex, fourplex. Awesome.
Absolutely.
Okay. So investors can also utilize FHA loans.
Yep.
Yeah.
Well, no, you have to. Well, as an investor, in a sense, as long as you're living in the property itself. So if you're buying a 4-unit property, you're going to live in one of them and obviously rent the other 3.
Okay. Okay. That makes sense. What is an FHA appraisal looking for?
So the appraiser will evaluate the house based upon HUD's guidelines. And so they're looking at structure of the property. That's one main thing the appraiser's looking at. So structure, something that could compromise the structural integrity of the house. They're looking at safety. So they're looking at environmental, fire, lead-based paint, mold. And when I say fire, they're looking for outlets, maybe exposed wires, environmental. They may be, say, a tree growing under a sidewalk that may create a root of a tree growing under a sidewalk that may create a tripping hazard. We know about mold and lead-based paint, which is homes built prior to 1978. No, they're looking for those kinds of things. And then livable. They want to make sure that the basic utilities of the property actually work
Mhm. Okay.
and that they're accessible. That you want to make sure that's accessible too.
Yeah, that's important, right? All right. What are the most common FHA appraisal issues that actually come up that you've seen?
I think the ones that I've run into the most is chipping paint. Chipping and peeling paint for those houses built prior to 1978, because of the lead-based paint, the appraisers will require that the paint be scraped, or at least the chipping paint should be scraped and repainted. But really, where the biggest issue with that comes in is if there's a shed or a garage. It's not the house itself. However, since it is an FHA appraiser, if there's chipping on the paint or chipping paint on the garage, chipping paint on the shed, they're going to ask you to scrape and paint those also. And that always seems to anger a seller and the agents. We run that quite a bit. Handrails on stairs, broken windows, prior water issues in a basement. And again, we're going to go back to the outbuildings. This would be a garage or a shed. If it looks like it's going to fall in, they may have you tear it down.
Okay. What is the difference between an appraisal and an inspection?
Home inspectors, in the beginning, it's really working for the buyer. They have, I think once the accepted offer is made, or once the offer is accepted, they have 7 to 10 days to get a home inspection, and that home inspection is going to be a bargaining chip for the buyer, and it's going to be a lot more thorough inspection of the property than what the appraiser does. The appraiser works for us. He's going through looking at the property and just making sure that he's looking for those items that we just mentioned. And big thing is making sure the value is there.
Mm-hmm. Yep. Okay. So appraiser is value and inspection is for the purchaser.
It's more for the purchase side, because if the seller's unwilling to fix certain, say, high cost dollar items, they may back out.
Okay. All right. So let's talk about qualifying because people often self disqualify before they even start. We're going to talk about credit, DTI, and underwriting. I'm not sure which one of you guys is taking this one. That's Zach again. All right. Our resident comedian. What credit score do you typically need for FHA?
Well, I think Dominic touched on this. You know, y- you can go down. There really isn't a minimum credit score, but once you get into those lower credit scores, you're going to have to put more down payment. You're going to have more down payment to get a house with a lower credit score.
Okay. All right. And how does FHA look at DTI or debt to income ratio?
Typically, you can go up to 55% debt to income with FHA,
Okay.
which
And
which with conventional, you got to stay under 50%.
okay, can you explain what debt to income ratio is?
So you take your monthly income, or excuse me, your monthly debts divided by your monthly income, and that's your debt to income ratio
Okay, so it's just a matter of how much debt you have compared to
compared to your income.
your income.
Yeah.
Okay, so pretty self-explanatory. What are the most common underwriting red flags?
We see like a lot of large deposits, and we got to know where that money comes from. And then you look at people who work variable hours, and they're not consistently working 40 hours a week. Um, Things that come up in appraisals, like Don was talking about, peeling paint, missing handrails, broken windows, etc.
Okay, and what documents do people usually need?
Same thing as conventional W-2, tax returns, bank statements, pay stubs, all the same stuff you need for a conventional loan.
Okay, and what's the number one thing someone can do in the next 30 to 60 days to improve their FHA approval odds?
Well, make sure you don't miss any payments on anything. Um, don't take out a lot of debt, and if you have high balances on credit cards, maybe pay those down a little bit so that that'll help your credit score.
Okay. All right, Zach, we appreciate that. So, we're going to compare FHA to conventional a little bit more here and kind of help you determine which one might make sense for you. So, when does FHA make the most sense and when does conventional make more sense?
I'll take that. Um, Normally, when I'm talking to a client, I present both options if we're below a 680 credit score. Main reason for that is because of that mortgage insurance impact. That when you get below 680, that the mortgage insurance premium of what you're going to be paying on a conventional loan could be well more than what you're going to be paying on an FHA loan.
Okay.
Um, Same thing from a rate perspective. Usually rates are a little bit lower on FHA loans. So it might make more sense there.
Yeah.
Final thing I'll touch on would be, if we have credit issues that, you filed bankruptcy, you filed foreclosure, things like that. FHA has shorter terms in regards to what you have to wait before you can get another mortgage compared to what a conventional one would be.
Okay. All right. So is FHA a good starter loan? You might call it that, or and then you can refinance later.
It depends upon the circumstance
Okay.
that, from a starting position that, if you have a pretty good credit score, conventional only requires 3% down now for first time home buyers. So, um, every situation is unique. Um, but I wouldn't say, FHA is just a starter loan that, it very well could fit that mold depending upon what their credit history is. Um, but I wouldn't necessarily say it's a starter loan anymore.
Okay.
It used to be, that was the stigma behind it.
Right.
So,
Okay. But we're breaking all those stigmas today, aren't we? Yep. All right. So I have kind of a roadmap that, I sort of concluded based upon what we've talked about today, some of the topics we've talked about today. So you guys correct me if I'm wrong on any of these. So if step one would be know your starting point. So get your credit, know your incomes, know your debts, get all your paperwork together. We all agree on that.
Yep.
Awesome. And then the next one would be to get pre qualified. So who can kind of talk about what pre qualification is?
I'll take it.
Okay.
So really, pre-qualification is the first step in the home buying process. So you want to talk with us to figure out what your home buying power is, um, and then also complete the application. Once we complete the application, we dot the i's and cross the t's, make sure everything looks good, run the credit, and then ultimately come up with a number that the borrower is qualified for. Let them know what price point they're in. Go over the payments with them, and then request documents at the same time. And then as they're looking, we can gather the minimum requirements for the underwriter. The underwriter can look at it and then give us commitment, which then puts them into that next kind of buying power. So when you have a commitment, you have a little more buying power, and then the borrower has a little more confidence at that point.
Okay. I appreciate that. So, one of the things that Charter West does to make it really easy to get a prequal is actually our app called Charter West Go. You guys utilize that for people to kind of come in, fill out some initial information, and it's really easy, quite honestly, to provide a few pieces of information and then find out if you're pre qualified.
Yeah, Carrie, real quick on that. The nice thing about the app and the is that it does capture everything and it sends us to us directly. So we do have all the information that they put in there. And to your point, if we need a document, they can just scan it, upload it, and we get notified. So it makes it really easy to complete the process and have that conversation. So the app does make it easy for us to kind of stay in touch with the borrower too, because they get notified
Yeah.
milestones and different things as they look. So the app is a very, very, very good tool to have.
Good. We're all about making the process easier. So, next step three would be to understand your full payment. So, as we kind of talked about with Sam, so understanding principal, understanding what your interest rate might be, your taxes, your insurance, your mortgage insurance. So, insurance and mortgage insurance are two different things. You've got to have your homeowner's insurance, obviously, for protection of the house, and then your mortgage insurance, which is actually going to protect the lender. But you guys would probably all agree that understanding the payment and everything that's included is probably a good next step. Yep.
Absolutely. One thing I can mention there, Carrie, real quick, is if the borrower's looking online and they don't put in the specifics on that house on a third party website, a lot of times it assumes that you're putting 20% down and it doesn't.
Right.
And so then we get the conversation like, hey, I want my payments around X. And then we in this price point. So the borrower is misled because they don't see the taxes, insurance, the PMI, So one thing is talking to a lender, we can tailor that for them and make sure they understand the payment. And I call it the all-in payment, so they understand, break it down for them, and so forth. Because taxes are different on every scenario as well.
Right. Yeah. Okay. Well, that leads me to the last step then is choosing a lender who can explain things to you, not just approve you or qualify you. So you want somebody who's been doing this for a long time that you trust. You want to vet your lender. You want to ask the right questions. You can always reach out to us too to find out more about what you should ask your lender before you start working with them. Um, so those are just things that you want to pay attention to as far as kind of vetting that lender and whether or not they can explain all of this information to you. So I'm going to do some rapid fire FHA FAQs, if you will. So whoever wants to take these is totally fine. So can FHA be used for a second home or investment property?
No.
No. Okay. Can gift funds be used for the down payment?
Yeah, there can.
Yes.
Yes, they can. Okay. Can a seller pay closing costs?
Yes.
Yep.
Nice. Okay. And what's the biggest FHA mistake you wish people stopped making?
Thinking of that
Sellers.
first-time home buyers.
Say that again.
Thinking that it has to be for first-time home buyers.
Okay. Anybody else?
Sellers accepting FHA financing as conventional as they're just as qualified as a conventional buyer.
Okay. Anything else? Nothing there. All right.
Don't transfer large amounts of money.
That's a big one.
Good one.
Where's that money going? All right. So we're going to kind of close things up here, wrap things up. And today we learned FHA isn't a lesser loan. It's actually a tool. It can help people buy sooner with less cash down and more flexible credit guidelines. If you're listening and thinking maybe I should actually do this, then you can reach out to us. And if you have any questions you want answered on a future episode, you can send them in as well. You can email kwurth@charterwest.com. Thank you guys so much for joining us today. We love chatting with you. We appreciate all the information. And we will see you next time on Beyond the Rate.
Thanks, Garrett.
Thanks, Garrett.
Thanks, Gary.
Charter West Bank, member FDIC, equal housing lender.